What's up, guys? George here. And just as things have seemed to die down in terms of COVID, well, things are getting tangled back up with the new Delta variant. So today, let's talk about the chances of lockdown being reinstated, what the stock market would do and react, and how we can prepare ourselves to pounce on another opportunity. By now, you've probably heard of the new Delta variant of COVID-19. It's highly contagious and can even infect those that are vaccinated to a lesser degree. And with news of Delta, Australia locked down extremely fast, even having the military go out to the streets to make sure people are listening to their stay-at-home mandate. But what about over here in the United States? What is the likelihood of us possibly going back into lockdown? In a recent interview with Dr. Fauci, really not that likely for the US to go into total lockdown due to the amount of people that are already vaccinated. Roughly 70% of the adult population has at least one dose of the vaccine. But big box retailers like Walmart and Target have recently reinstated the mask mandate for employees. You don't have to wear a mask if you're just going in as a customer if you're vaccinated, but if you're an employee, it's mandated no matter what you have. And these past 2 months, the Delta curve has actually gone up instead of leveling out. It's surpassing cases of this time last year already. So depending how cases rise during the summer, we could possibly see stricter restrictions during the fall. Like I said before, total lockdown probably won't happen due to the 70% adult vaccination rate, but sectors like the hospitality could get hit just from people being scared to go out again. And with fear comes a downtrend in consumer spending, which is not good for the economy. Which really leads me to my next point on how Delta could affect the stock market and what we should really expect. So if we look back to March of 2020, we can really see how COVID caused a major flash crash in the stock market. And now with Delta pullbacks, we saw a similar pushback from investors on July 19th, with markets maybe thinking history could repeat itself. But here's what I think. What does the market really love? Low interest rates. What didn't we have in the original outbreak? Low interest rates. What do we have right now? Low interest rates. And the longer COVID, Delta, Sigma, whatever persists, the longer we will be in a restricted state. Because at the end of the day, the Fed just wants to see the economy bounce back to how it was originally before COVID. And that's when they will start easing up rates. And that's also when we'll see a slight downturn in the market. I know, the stock market's this really weird beast. It wants everything to go up, jobs to be good, unemployment to be low, interest rates to be low. But as soon as COVID disappears and interest rates start coming back up in quantitative easing, then everybody panics and they sell everything. So based on the facts that we have now, I really don't see another March of 2020 happening again. Although I do think we might get a slight hiccup if we do see a major spike in Delta cases. On the other hand, if COVID goes away completely, I do think we would see a big pullback in the growth sector as interest rates start to go up again. People would start to look at leverage and loans as a no-go with higher interest rates and start looking to more value proposition stocks and maybe get back into bonds as their yields start to get more lucrative. We could potentially see a bloody growth sector like tech and EV because since last year of March, we have seen non-stop highs after highs. Look at the S&P, literal non-stop high after high, almost every single month since. There has to be a correction sometime. You can't just go to the moon forever. You have to land eventually, and then you can start flying after you refuel again. That's fine, another dip, a correction here and there. But what about us? How do we take advantage of this opportunity? Now remember in March 2020, in that flash crash dip? Well, everything was 50% off. It felt like you went into the stock market that was turned into a Dollar Tree. And that was the perfect moment to buy. If you had capital around, you were salivating. There were so many potential buys to be had. You didn't have enough money to buy everything. But the question is, how can we figure out when that's going to happen again? Well, in 2020, we experienced a major lockdown, closure of schools, malls, restaurants, etc. Now, this probably won't happen again, but we might get some more restrictions in place on how many people can be in a certain area at the same time. While it won't cause this massive 50% flash crash again, it might cause a little ripple in the market, which could be a great opportunity to snag some shares you've been really eyeing up lately. Also, contrary to popular belief, another lockdown would most likely result in another stimulus bill. So people might get scared in the moment, But as soon as a new stimulus bill would be announced, I think the market would prop up even higher, because we saw last time most people put their stimulus money into some type of investment like the stock market. But another more likely situation is, well, nothing happens. No lockdown, no restrictions, no stimulus. Everybody goes back to their daily lives, the world starts rotating again, and inflation concerns start to pop up in headlines again, causing the Feds to increase rates. And that's where I believe we will see a major sell-off. As soon as rates start to get hiked again and bonds start to seem more appealing to people to buy, a lot of people will jump out of stocks and more into bonds. And the biggest markets that will get hit are the growth sectors, like I said before, tech and EV, because these sectors are highly leveraged sectors currently. And what do you do with leverage? Well, you pay interest generally. And what do we do when we have to pay higher interest? Well, we don't want it as much. Now, all this means is if the company is good, you're okay. Don't worry about it. But we'll have a great buying opportunity. We'll get these coupons to buy our favorite shares at a discount bargain. That's why it's so important to do your research when investing in a company, because even if it might have its dips, if it's a good company, it'll overcome those dips and soar even higher. And yes, we all want to buy our favorite shares at a discounted value, but research shows if you invest diligently and consistently, you will outperform those who just wait for the biggest dips of all. 2008, March of 2020, whatever. Based on research, if you just invested consistently, instead of just saving that money and investing on every big dip and selling at every major peak, you would be down more than that person that even bought at the highest highs and the lowest lows. So the best bet is, well, buy consistently, do your research, and have some capital on the side just in case we see some crazy crash so you can hop on your favorite shares at a discounted rate. But what do you guys think? Do you think COVID 2.0 is happening? Do we think we're getting into another lockdown? Or is this just all blown out of proportion and we're just going back to our daily lives? Let me know in the comments down below. And as always, if you like this video, I'd highly appreciate a like. Thanks for watching, and I will see you guys next time.